Hey guys, all right. I know it's been a while since I've done a video here. Just been super busy with kids sports, and we're starting some foster classes so we can get licensed to do some foster care. So we've been trying to get all that done this week. It's just been super busy, haven't had time. But we have a lot to talk about. It's been a couple days. So big thing obviously was FOMOC yesterday. Markets had a huge dump overnight, or over during the day rather. The day before that, we got earnings. That was Google, AMD, and Microsoft. So interesting enough, those were pretty disappointing earnings. Pretty big red day into FOMOC, which of course then led to a bigger red day in FOMOC. A couple big things just to highlight, and if you read, I put it in my TA last night for the more detailed aspect, but big thing to note is that obviously Jay Powell basically said what I was kind of thinking was that we are not foreseeing rate cuts yet. Jay Powell still can't guarantee when the next rate cut's going to be, and he even said most likely it will not be in March. As of right now, the odds of the next rate cut is down to about 35% in March, but we're still sitting about 80% odds for May. So we got quite a few different things of economic data and quite a few things of CPI and other things that will come in before those meetings. So kind of see how that goes. One big interesting thing that's kind of developing right now is a possible bank run is in the making again. So the New York Bank Corp, I guess this is the bank actually that took over Signature Bank. So you remember last year, around this time actually, Signature Bank collapsed, and there was a couple other ones that First Bank Trust or whatever it was, and what was it, California or something like that. There was quite a few that collapsed, but they collapsed, and this is the bank that took them over. So this bank cut their dividend, and posted some massive losses. In the last 2 days, they are down over 40%. Interestingly enough, of about 236 regional bank stocks today, only about 60 of those were green. Everybody else this week is posting double-digit losses. So very interesting developing story there to see if anything comes of that or not. So quick, obviously you can see Meta killed it apparently on earnings. They're up 12.3% right now. Going to look at who else Amazon posted. So Amazon's up 4.5%. Apple still has not posted yet, so you can see we're just kind of hanging out here waiting. Apple usually doesn't post till about 4:30. So let's take a look at the market here. So yesterday we got a new supply at 490.95. We came down and we had a hard bounce, and then boom, immediately recovered. Interestingly enough, we have done this same exact move 4 other times. So let's take a look at that real quick here. So the 4 other times was right here on November 9th. We had another one right here on December 6th, and then another one on December 20th. And what happened on every single one of those? They led to a massive breakout to the upside. On average, we have from the time that we closed, or the low that we closed on the drop, we have rose 4.9% over about 20 days. This gives SPY the opportunity to hit about 506 to 507 by February 20th. So again, this is just one massive breakout channel that we are in right now. So with a new demand being put in today at 482.83, bouncing off 20 EMA, retaking 8 EMA, the only resistance left is 490.95. And you can see right now, after hours, we are gapped up about, let's see here, what are we at? 0.3%. And look at the level we are at. We are directly at that resistance. I expect us to push through it tomorrow, and likely we're heading up into the mid 490s. Going over to ES here, same thing. We came down, put a new demand in at 48.71. We now have 49.51 as our next key resistance, and look where we're at. Boom, 49.51. So there's a good chance we're going to open, and we're going to just see that breakout overnight. I would not be surprised kind of like we saw here on the 18th and the 24th, I would not be surprised to see a big breakout tomorrow. Our target here is about 49.76, but really 5,000. That's the target that we're really looking for, the bigger target. Going over to the Qs here, same thing. So we got a really nice bull flag that looks like it's ready to break out to the upside. We had a bigger drop on the Qs and a more dramatic drop. So we have a supply at 428.24. We had a support area at 423.7, which we did lose. And yesterday we actually had daily sellers for the first time since way back here. Now, we bounced off 20 EMA and we barely got over the 8 EMA here. So same thing you can see after hours, we're already gapped well over this area. So our next target is 428.24. Going over to NQ, same thing. New supply was put in at 17,713. We came down, got a new demand at 17,260. Really nice hard bounce off that 20 EMA support. And now we're on a massive breakout. After hours, so strictly after hours, you know, it doesn't show it because it's still part of the daily candle here. But Qs or NQ after hour is up over 120 points. Massive, massive move. So same thing here. I'm expecting, much like these 2 days like here, I'm expecting, boom, breakout to the upside. Our target is 17,713 tomorrow. So one thing I wanted to talk about was the VIX here. Now, again, I don't love talking about the VIX much anymore just because I find it to be, obviously, in this chop here, very unhelpful. But the one thing that I continue to find to be super interesting is the fact that for about the last 2 months now, the VIX has continued to make higher lows. So if you look, we put our 52-week low in back here in the middle of December. We came up, we put our low in it right here, came up, put another low in, actually confirmed previous low, came up, put another low in, and now we're still trying to break out to the upside here. Now we have a pretty big resistance area from 14.35 to 15.29, but until we really see this downside move here, I just find this pattern interesting and something to keep an eye on. Now, looking at the dollar here, we had the opportunity yesterday with the big pop, but as you can see here, 200 EMA continues to hold as resistance. Now we got a massive bearish engulfing candle, closed below 20 EMA support, put a new supply in at 103.518, and we're breaking through our bull channel. Likely we are going to see a big old drop here on the dollar, and we're going to be targeting this 102.289 to 102.461 area. On the 10 years, it already had started its downside move, which is another reason why I expect the dollar to also see a downside move here. We had the big old bull channel that we were trading in. As you can see, we have broken through that, and now we are starting the downtrend. We have a new supply at 4.138% that was put in here on Monday. And you can see now we're under all the EMAs. We had a potential to bounce here at this 3.918 to 3.94% area. This was the lowest from back here in the beginning of January. However, it would appear now that we are actually going to go all the way down to 3.796%, which is the low from December 27th. If we break through that, we have a triple demand area at 3.702% to 3.741%. And this is a major area from back here in June of 2023. So, looking at everything here, I just do not see a single reason in this market to be bearish. This was the fourth opportunity over the last basically couple months now that the bears had the perfect opportunity to take this lower. This was not only an earnings miss, the three before that, FOMC, but also from a technical standpoint, we had everything you could have wanted to have a drop and a sell-off, yet bulls bought the dip, we're still going up. So until we find a time where we get multiple back-to-back heavy red days, there just is no reason to be bearish in this market. Everything basically has just become a buy the dip opportunity. So, all right, guys, I hope you guys had a good week trading so far. I'll try to get a weekly recap tomorrow. if I have time. If not, I'll do it this weekend. But I hope you guys had a good day today, and I'll see you guys tomorrow.